One and we're live. It's Eric with Option Edge, and I'm here with a very exciting bullish reversal signal in OKTA. Okay, so let's get right into it. We have what's called the 3 inside up bullish reversal candlestick pattern. Okay, what exactly is the 3 inside up pattern? Well, it starts with a down candle followed by a green candle that's contained within that red candle. So if we click here, you can see that we had our red candle here. Green candles contained within the body is contained within the body of the red candle. Then the next day we have a green candle that closes above both candles. Okay, so it's also at the bottom of the Bollinger Band. So this is definitely a strong signal, reversal signal. We're also coming off a major resistance here at 208, the 208 mark. And you can see we've touched down a couple times. I was looking at this before. If you look at my other OKTA videos, I tried to get into going along with OKTA right around here. I got out of it, luckily, which was good because I saved myself some extra pain because you can see it really gapped down here. I was actually waiting for OKTA to touch the 208 mark, but that didn't happen. We got this reversal pattern, so now I'm in the trade now. So we're doing a diagonal trade with this. So a diagonal is a little bit of a more advanced concept in options. So let's take a look at what I chose in terms of, before we look at that, let's come and look at here. So this is what we got here. This is a diagonal. So we bought the August 20 220 calls, okay? Cost $13.30. We sold the July 235 calls, okay, for $3.10. So basically, you can tell there's two different expiration dates. There's two different strikes. Basically, what we're doing is we're selling an out-of-the-money call with a shorter expiration date while we buy a longer at-the-money call, longer date. So basically, what this does, it protects the call we're selling. And I'm going to go into detail. I'm going to put on a whole class about diagonal trades, but basically, it's protecting our theta decay. Okay, so if it's protecting our theta decay, so I'll leave it at that. So that's what we're doing. This is what we have here. So we bought the 220 and the 235, and let's look at the back testing results for this. All right, here's the back test, okay? So let's look at the technicals. So we have the 3 inside up pattern, which is programmed into the software. The RSI is under 60, the relative strength index, and the stock is below the 21-day moving exponential moving average. Let us just double check that. So I got movingaverages.com looking at OKTA. 21-day exponential moving average is at 229. Stock price is at 216. And then the RSI is at 40, okay? And plus we add in the 3 inside up indicator, okay? And if you want to look at the 3 inside up indicator, you can just Google it and Google images, and you can see this is basically like textbook what we have back over here. Okay, we have down, green, then bigger green, and that's more or less. And then also, I'll just do a quick, just read this from Investopedia.com about the 3 inside up pattern. The 3 inside up pattern is a bullish reversal pattern composed of a large down candle, a smaller up candle contained within the prior candle, and then another up candle that closes above the close of the second candle. So that's more or less what we're seeing here. So let's go back to the back test. So what we have here is, bear with me for a sec. So we chose the 50 delta with the 60-day expiration. We went a little longer. It's about like 73 days. And then we went with the 20 delta for the stock we're selling, for the call option we're selling. So let's take a look. So the 220, let's look at the deltas here. Okay, Greeks. This is 49.82, so basically almost right on the nose, 50 delta. Let's check out the other one. 235 call. What's the delta on this? Okay, the delta on this is 23, so it's a little higher than 20, but it's close enough, okay? So you get the idea. That's what we did. And let's go back to the back test one more time. So let's look at the historical results. So as you can see, we've had, this has happened in the last 3 years. This type of signal has happened 4 times. And each time, the average win was $512 with a return on investment of 68.7%. Gross gain, 2K, gross loss, 0. Okay, so I really like this. If anything, I only bought 1 contract of this. I might add to this if it drops a little bit tomorrow. So one way for risk mitigation, if we close underneath this resistance, I'm going to exit the trade, okay? That's basically what happened here. We closed underneath this resistance, my other OKTA trade, and I closed out for about a 26% loss, which was good. I took the L like a champ, and I saved myself from taking a bigger L, okay? So I feel like that is a mark of being able to trade without emotions, okay, which is the name of the game. So yeah, if we close underneath that, then we're gonna close out. Let's take a look at last thing here. We're gonna take a look at the E-Trade, how this looks on the profit loss diagram. So this, okay, if you see here, the orange line is showing you the profit and loss expiration date as July 09. So we close this trade when the first leg of the option, the short option, expires, okay? That's my other rule. So, and this profit loss diagram, the orange is representing what happens when the first option expires, okay? So, let's say, right now we're at 216. If, let's say, within the next week, the blue line is signifying a week from tomorrow. If we go down to that 208 mark, we're going to be, if we close below that, we're going to lose almost $500. I'm okay with that, okay? So just know if, yeah, we close underneath, we're going to lose about $500. Let's do one more. Let's say that happens the last week of July. That's still about $500. The max we can make is if we get to the 235 strike, which is right where the strike we're selling starts. So yeah, that's basically it. So another thing I like to do, and if I'm up, I did this with Elastic, and Elastic we made a 50% gain on Elastic with the same trigger, the 3 inside up trigger. And you can look at my other video about Elastic and look at the results for that. But basically what I do is once I'm up a little bit, 20%, I will sell a credit spread, call credit spread against this just to hedge my position a little bit. And yeah, that's what I do. So I will post updates on how this is going, and if I do that credit spread, I'll post that as well. So I think this is a great bullish reversal. I'm pretty confident on this. So yeah, let's get it. All right. Hope you enjoy this video. Take care. Bye.